All right. I took a big sip of water. This is GV's Sitfolio episode 2. The miners strike back. What a better time to do a podcast instead of doing it when it's at the top, when I'm screaming to the moon. And then after that, you're in a lower risk, your higher risk area with because of the next correction that always follows, or most of the time follows an important breakout. Right now, when we're amidst of a correction, you get to see more clearly where we're situated in your uptrend, if you still are in the uptrend, and you get to whatever entry you have now, probably lower risk, higher reward, since you're buying to a fear entry where you're paralyzed. So I'll be going through all of that. So I updated the list on January 16th. It's right here on my on right hand side. I'm going to start with the speculative tiers. One of them minus Silver Bullet, an IPO upcoming. Don't have anything there. There's another IPO coming, MANTARO. It's not in there. And then we're going to end with the big dogs up there. Also notice, guys, on the top right, I did I practiced adding hover cards or info cards in YouTube. Not sure how the actual name. It's a sign up to Steve Penny's free newsletter, Silver Chartist. Does great stuff. Now Jeff Clark, man, the gold advisor, is in there. You know Jeff there. He's often you see him with Mike Maloney on Gold Silver, on Cambridge, on Palisade. He's like really a staple. Knows pretty much everything there is to know about the mining sector. Yeah, Kevin Wadsworth, North Star, also putting his contributions. Great inspiration to my charting evolution. Kevin, much respect. And I have also 2 epic gold and silver charts in there, exclusive to the free newsletter, guys. So click on that on top link. Let me know if it works, or down in the description, I put a link there. You could click there. All right, no Kirk land like gold this time. I'm going to steer away from that and just focus on the list. So you ready, guys? Let's do it. Okay, Nubian Resources. I'm going to do the monthly chart. That's like if I do these updates once every month and a half. Monthly chart is good. You get a new candle, you get to see where the price action went. You don't get scared with daily volatility. So let's just start here. Nubian, are you above a 1-year inclining moving average? Let me max that out. Yes, you are. So right now what I see is, let me get my horizontal ray. So here's a breakout. Higher lows, tight, above a 1-year and 3-year moving average. 1-year, 3-year. Pull back. You see, oh, I'm scared, but previous resistance, now support, you're above it, you're climbing up, not overcoming those highs, then you're coming to test that. And as long as you keep doing higher lows, for me, this is actually entering a good word, risk versus reward. January is a couple of weeks, so if you want, you could let that candle close, just see how close you get to that inclining 1-year moving average. But definitely the pressure right now, you could see it's up. I wonder if I could put favorites there. Oh, yeah. Because I could put favorites. How does that work? Can the favorites show up here? Oh, I'm learning every day. See, the pressure is going upwards. Same thing here, following that volume defined price action. Volume defined profiling right there. So this is it, man. Once this consolidation work is done, let's see if I could get it info trend angle. Oh, okay, these are my favorites. Wow. To angle, I'm on the log chart. Remember, I always put the log chart for on anything that's measured in fiat currencies. Fiat currencies are being debased exponentially, so it's logical to put it. Maybe for mining stocks, it could be a little harder to maintain these strong angles of explosions. But on the shorter term like this, so here you go, pull, flag, pull above an inclining 1-year moving average. So here's my target for Nubian Resources. 278, and right now the price action is at 41.5, guys. Wrong one. Wrong one. Alianza. Alianza. What is happening here? Volume defined, support, breakout above, convincing, pull back close towards that breakout line. Buyers coming in. The month is not over yet, but this is just classic. Look, every time went up for 2 months, everybody thought it was the end of the world, but you were above an inclining bullish cross 1 year, 3 year moving average. And then after that, you just came back and you're pulling back close towards. So this is actually a great fear entry right here at these levels. Could have pulled back a little lower. We'll see during the month. But if it closes above here, for me, with the inclining 1 year moving average, with that volume defined support below it, it's looking very good for Alianza. And what about my target? Wow, I'm going to price range. Oh, look at that. Favorites. I can't believe I love TradingView. You could use my affiliate link. It's going to be somewhere in the description if you want to sign up. Or you could wait for next year for Black Friday, great deals. Or renew now and then renew at a cheaper price on Black Friday. So here's a target, 41 cents. Oh, I'm going to put all my favorites here, guys. Wow, look at that. All my tools. So it's right here. This is my measured move for Alianza. Perfect. So breakout here. Yeah, a lot of people bought here, but as you'll see, yes, no volume defined resistance, but you have monthly candle defined resistance right here. We're trying to trace out a bigger pattern, consolidation in between the support and this resistance, and this can make even maybe a bigger pattern eventually. I'm measuring this move here, but if there's a little sideways move here, this could be the bigger pattern and giving us a little higher target, more greedy target to 300%. So this target would bring us here to this congestion area right here. So at 82 cents about. Pure. Why do I keep clicking on that one? Alianza. Next one, Silver Sands. All right, not a lot. So this one, I'm going to have to zoom in on the weekly chart. So I have to go on the daily. So it's above its 10-week and 30-week moving average. See that wick below it, but the price action now is above it. So actually what we're seeing right here is consolidation pattern after this pullback. Actually severe breakout in the December of 21, exploded upwards, correcting above now this inclining 1 year moving average. So we're going to get more and more data. You can see right here. This is actually pretty cool, this little favorites. So I'm going to add my rectangle to my favorites. So let's say I put the rectangle right here. You see that volume, defined base. And right here, we're just back above it. And now the price action getting sucked back up. So during the month, the price action was this low. And if you're too close to your monitor on the daily chart, you're probably sold. Oh, this sucks. It's going back down to zero. The monthly close, guys, is a big telltale sign. So you have to wait, especially these smaller stocks, less vol. Look at these wicks, insane wicks. This could whipsaw you. You got to move up time frame and understand the volatility of the instrument you're trading. So right now, this is actually a great low risk reward entry for Silver Sands. And look, you know what I'm seeing right here, right? Am I seeing an arc? Arc. I see arcs everywhere. I can put that on my favorites. Wow, my favorite tools. But the problem with favorites is I might rely too much on them. You know, when you have your favorites, then you don't go. Every time I go back into this list, oh, look, they added something new. If I always go my favorites, sometimes I wouldn't have realized that the path they added it recently, or TradingView always adds a whole bunch of stuff. So yeah, favorites are kind of cool, but remember to always go back in the source and pick from the well of tools that they have. Look at that. Scary, right? This one here. Let me see that. Depends where it closed, because if the month it closes back in, it's a close that matters. So if it closes back into the arc by the end of the month, there you go, maybe something like that. Down, up, measure and move would be at the top of the arc. Maybe usually a reverse symmetry move, so about here. So maybe you look at, in February, this thing could be at 45 cents. Reverse symmetry move. Inclining it 1 year, 3-year moving average. Looking not bad for Silver Sand Resources, guys. Patrick, how could you be that bullish? Stop it. Stop it. False hopes. All right, Max Resource. Oh boy. Okay, that one. Okay, we're on the weekly. Let's go back. Reduce noise. Okay, Max Resources, 1 year, 3-year moving average. It's still below. It's a 3-year moving average. I'm gonna make that thicker. Black and white, it's fun, but okay, 3-year moving average is thicker now, so it's starting to go up off that base 1 year moving average. But right now, pulling back hard. Where is my? So this is my volume defined support. Not as pretty as the other charts where they were above, they're inclining. Good thing, see, when it was above its 1 year and 3-year moving average, good thing happens. You get sucked upwards. But when you start going below, bad things happen. You get sucked down below. So here it's below 1 year, 3-year moving average and went down. So now it's halfway. It's kind of getting stuck. It's not quite out of the woods yet. So let's see, bigger picture. Trend line. How could that not? Oh, I could even move them. So this is it. 1, 2. So this is the line in the sand, guys, for Max Resources. If it could bounce off maybe that 1 year inclining 1 year moving average, let that 3-year flatten out, we could start getting into an area right here where it's a low risk entry, and then maybe this would be your target right there. So this one you gotta see. I still went back in the so something like that here. So let's see how this closes the month, and if it could hold up that probable ascending trend line on the monthly chart and climb all the way back here to about $1.03 around this congestion area. And if it could break out above this descending trend line, then you really turn the vapors. You're above that 3-year, 1 year moving average, then full steam ahead. But right now it's congested, having a little hard time getting above that 3-year moving average. So keep that an eye on that one. And Max Resource Group. Next one. Brigadier Gold. What are we dealing with here? We use that. So here's a volume, a lot of congestion right here. Try to break up above, going back down below, testing that declining 3-year moving average. Still above the, whoa, it's below the 1 year moving average. I would like to keep an eye on that one to see where it closes the month. Because right now, you're also on a previous resistance, now turn support, what I call wall. You're right smack on it. So this could be a really good fear entry right here. So let's see how it closes. It would kind of be cool, the wick and really buyers coming in, closing on top of that line just to prove that a point that the buyers want to support this price action. But this looks like a low risk entry. But I would still prefer if the 3-year moving average would be upwards, because now you have to fight it. You're fighting that. So this is probably what I'm imagining as, once this matures a little bit more, 600%. Jesus. Whoa. And you'll see these measured moves, they often match up with previously defined resistance or support. See, this is support, turn resistance, bang. So right now when you hit it, this is probably going to be resistance. So this is probably your end game target, $3.58. But this thing here, you want it to, where's my zigzag? Zigzag path. So this thing here might go up here, something like that. Let's make it a line thinner. Maybe we're dealing with something like that there. So it's going to retest that. It's going to start creating like an arc, and the longer it stays above that 3-year moving average, the more it's going to start flattening out, going upwards, and then it supports you. It could be a low fear entry here, but because of the 3-year moving average going downwards, you could be stalling sideways a little bit more than the stock that's really primed above an inclining 1-year and 3-year moving average. SAG, Sterling Metals, woohoo! Trendline, long term. I've done a lot of charts for this one. Look at that. So right here, it's above the 3-year moving average. Doesn't have to fight as much, but it's going to start flattening out soon and turning upwards. The 1-year moving average really supporting it. This is the base. So it broke out of that consolidation pattern. Now it's pulling back. Where's my... So everything's pretty much still as planned. And right now pulling back. If it stays above the 56, 58, it's very bullish, especially if there's a wick and the buyers could come in. And here is... All right. And the measured move, if this keeps consolidating in this flag, I should have a target around right around here, 520. And whenever you put a target, sometimes you're off and you want to think that it doesn't make sense, because especially when the pattern, whenever you do patterns, they're not complete until they actually morph completely, and then there's a confirmed breakout out of it. So this right now, when I do this pull flag, it's more of a what I think is going to happen, sideways move, and then after that, if it explodes. But until it actually confirms and closes above its breakout line, it's just a possible pattern that's there. So often, let's say I have a target here. Oh, look, it's going to go up. And then it doesn't make sense. Look, I have monthly defined resistance right here at $4. And then maybe there's a vacuum that brings me up all the way to this previously defined support and outturn resistance, a wall at $7.90. So this measured move right here, it'd be logical that it could probably even bring me to this descending trend line. So it could slow down around here, maybe overshoot and hit $4. So these are all levels you must take into consideration when you estimate targets. It could move sideways here, consolidate above this breakout line, what I call a bullish transition off a descending trend line. But then after that, you're aiming to break out above a horizontal breakout line to reach higher targets. But right now, this has broken out in December. It's pulling back right now. And the longer it stays above that 3-year moving average, the better it is. So this is type of move I'm imagining. And look, those targets is for August of this year. So that should move pretty fast. Wow. Wow. All right. Okay, so now we're out of the speculative tier. Let's move on to the normal tier. We have 5 candidates. Outcrop. It pulled back. No. To the moon. So yeah, to the moon, guys. Like I was thinking about that. It's, if I say, yeah, it's also on which time frame somebody says that on. So let's say I'm on the monthly chart and I say, I put my little classic moon or rocket ship. Put my rocket ship there. It's on the monthly chart. So monthly charts, there's a lot of noise. Look at that. Let's say this is the anchor going down. But there's still, if you go on the daily chart, there's good corrections up there, bear market rallies, etc. So if I put a target up there and after that, you say, oh, Pat, it's correcting. Is it still going to the moon? You were off. Well, look at the trend, the higher trend. Look at the 1-year moving average. What you could do actually is the higher the time frame, the more this smooths out. Or look, just, there you go. Make that disappear. And look how smooth that is. So eventually all the noise, if you draw a angle trend line, see that trajectory? That's noise reduced. Whoa, whoa. Oh, pat. Yeah, on the log chart, when you move. So let's say, see, this could be a trajectory to the moon. So if you want to reduce noise, remove the price action. Just look at the 1-year moving average. And look at that. So here's my target for, I keep going back there. That's my insane to the moon target for Outcrop. Where's my horizontal, my vertical line? Right here, vertical line. So for 2023, and this is in line with North Star cycles that we should be reaching a high maybe in 2023 or 2024, and then heading down towards that November 2024 low, that presidential cycle. So if you want to reduce noise, sleep well at night, yes, it's going to go up and down, but this could be the ultimate target, $13 around that area, maybe overshoot for Outcrop Gold. There's many ways, you have to experiment. There's many ways to reduce noise, to see how the price action moves. And look at these black candles there. Even on the way up, huge correction right here. Oh no, it's going down, and then it keeps climbing up. Now that you see that, like sag, it was just before, it was just like 3-year moving average just starting to turn. Right now, this one's really supported 1-year moving average. The 3-year moving average is going to start supporting it. So this one's a little bit more advanced. This is probably a few months ahead of sag. What sag's probably going to do right now, consolidating. This one's actually broken out, broken out of that descending trend line, testing that 3-year moving average. Now retesting that pivot line, that breakout line, which is now support. It's looking very good. Above volume defined support. This is just following classical plan of a transition into a bull zone. So the descending trend line is a violent push out. The descending trend line, the angle trend line, and after that, you're starting to try to break out of horizontal breakout lines. And that's what it's trying to do right now. And once it does that, then you've negated a lot of that downwards energy, and then you're going back upwards. I could do my classic trend angle. Oh, yeah. So something like that. And you could have some measure moves here. Does that make sense? This target. Previous support, turn resistance. So that's a target 260. And maybe reach it before the end of the year. Remember, this is the bottom. So the white candles could be even a few months ahead. So see, those are targets for Outcrop Gold, guys. I don't even have to go to my other tools. Right here, I have a distance from its 1-year moving average. I could see right now, there's probably some charts we're going to see that I'll have to go to use these tools. So right now, with those black candles coming down, I know that I'm close to that 1-year moving average. But if we're stretched, then we could look at that tool and see where we are. So right now, these are all the fear entries where you're paralyzed, where, oh no, this sucks. This is actually this region here in a bull market is actually a good sweet spot. I could have even had fun with the stock. Trying to see if there's a pivot line somewhere where the stock could actually start to bounce up and go back into the bull par zone. It might still in that trend. But right now, just on that price action, I know in the bullish transition zone right here above a breakout that happened a few months ago. Outcrop Gold. DV. Dolly Varden. Whoa, black. Back in black. This one sucks, man. Sucks. All right. Previous support, turn resistance. Touch it once, twice, 3 times. But right now on this third time, we have the 1-year moving average supporting. We have a flattening out more of the 3-year moving average. Starting to turn down. Where's my volume defined support? Whoa, okay. So this one's kissing the 1-year moving average. We'll have to see how the month ends, how that closes. And you don't want it. It'd be ideal if we could get a wick, see the buyers come in and bring that price action above that volume defined support. So we have a couple of weeks for January to see how that closes. If that keeps breaking down, I don't know if it's going to go test that 3-year moving average, a little more sideways move. But you're still approaching lower risk entries at these levels. So let's just see how this one works out. Possible pull, flag, pull. If this one could stop going down, if it could bounce back and shows that it wants to go back up, then these are the type of moves that are in the cards. $3 for Dolly Varden. Look at that right here, close to the 1 year moving average. A lot of fear. It's smack on it. Yeah, that's why there's no bar right here. So it's kind of these situations right here. But in an uptrend, you would expect a bounce off that. Check it out. This is like the stock, so it kind of gives you a support idea where this could start slowing down and bouncing back up. So there could be, we have to let the market just a little bit more digest what's going to happen here. But if it bounces back up here off that pivot line, and then after that you're going back into a bull zone, and then hopefully the stock could stay here for the ride up, guys. And what about my measured move? Non-greedy measured move. Does it match up with my flag pull? A little higher, 360. Yeah, so it brings me back to almost these all-time highs there. $5. That'd be the second step. After we resolve this and we go through all that, that'd be those measured moves up there. Dolly Varden. MTB, guys. MTB. What are we dealing with here? Same there. A lot of these have been correcting. So let's see where this thing stalled. Previous support, turn resistance. See how that pattern broke down here? Try to test it. No. Down, down, down. Couldn't get quite to it there. And right now, smack. See, we right above. Market says, no, you're not ready yet. There's more digesting to do. What are we dealing with here? Here. Well, this is the case where I think this is the breakout. It actually broke out above 1, 2, 3, 4. Yeah, it actually broke out here. And now what we're seeing is the what I call the bullish transition zone. Something like that, maybe. Like that. Test my pivot line. No. Retest. Test. No. Down. Test. So right now it's stuck. So the angles, you see the angles, how they're less and less steep. Well, that's because you're starting to build up an uptrend. So the first one's the steepest. You need energy to break out, but then you pull back, retest whatever you have to retest, the inclining 1 year moving average, the descending breakout line, and eventually you start breaking out above horizontal breakout lines. So this is pretty much the final one. 55 cents. If we could close above that, this thing should really get some steam. Where's my rectangle square? Right here, generating a volume node, which will become support once we're above it. It looks great, guys. Higher lows. I describe all this because I see it all the time. I see it, but it's good to verbalize it so you guys could see it. You're still doing higher lows, not doing lower lows. So that's signs of an uptrend. So you got to look up until you're starting to do lower lows on the monthly chart. That would be worrisome. And here is, there's a lot of stuff here. Let's do the pull flag pull target. Pull flag pull. So something like that. So here would be the target 126, which could coincide also with just above overshoot this monthly defined resistance. You're at 38 cents. Let's remove that one. Lots of lines, Pat. Remove. Or the measured move. Jesus, I don't want to go all the way down there. So let's just say the measured move from this. So 243% move. Add it to the breakout line. Something like this. So 185. And this one, you probably guessed it, probably coincides with some monthly defined resistance. It's all about being in the ballpark, guys. First thing is you want to identify the trend. Make sure on the correct side, nothing is broken down. And until you start getting closes below that 1 year moving average, it's all good, guys. It's normal behavior. So not bad for Mountain Boy. Do you live in the mountain? Monarca, strong selling. Except we're grabbing it. Maybe this podcast I could have done in 2 weeks after the January close. We get maybe more clarity. This one's following pretty much a script, looking really dire, getting close to that 1 year moving average, below that volume defined node. But we have to let the buyers come in by the end of the month to see where they want this to close. Inclining 1 year moving average, inclining 3 years moving average. Here is my resistance, my previous support turn resistance, and now once we break out above that, it has become support. So all the elements of an uptrend with higher lows, but right now it looks pretty scary because of those candles. Oh, is it gonna keep going down forever like this? Because look, you see the difference when you go back up here and you're not quite you're below 3 year moving average. It has a tendency to bring you down, but once you're above and you stay above the 3 year moving average, the dynamic's not the same. The pressure is going upwards. So these consolidation patterns, instead of being them reversals, are simple corrections. So here could be my pull flag pull, measure move, bring me back 71 cents. And if that's too greedy for you, then let me see if I have, where's my long-term? See here you have the paradigm shift. That strong explosion, retest, that breakout line. After that, we're going to get more and more flat trend lines. And then you're above it until you get that horizontal breakout line. So that's Monarca, 68 cents. Measure move. Should I do the other one? Remove drawings. So let's not go too deep here. 2 cents. Let's get not that greedy. So once we break out of this bottom base, add it to breakout line. That should brings us pretty much here, up here at 500%, back to these all-time highs, 96 cents, 98 cents. Monarca. ARD. This is what, you see, during the month, it was red. It came all the way down here. Buyers came in. So this one's a little ahead of the other ones. So for the other ones that we saw that was trill, like a Marabozu strong black candle down. Maybe by the end of the month, hopefully the buyers come in and we could just see a wick. But this again is classic uptrend type scenario. You broke out convincingly, pulling back hard. These smaller stocks is not as clean cut. The resistance and support levels, it's like they're malleable. You sink in. The market's not perfect binary type of situation. And then you see come back up. Now you're testing that breakout line. That's a lot of strength. If I had the Mansfield relative strength indicator, and look at that above it, 1 year, 3 year, inclining, huge base below, creating another launching pad, another base of high volume base, where it could, once it closes above, that's going to be its next support. And after that, look, clear skies ahead. Clear skies ahead. If I sing it, maybe it's going to be true. It's going to happen. Let's be conservative. So this is a target for Argent Minerals, which Argent is silver in French, guys, or maybe some other languages. And it's weird because when I grew up, it's always, est-ce que tu as de l'argent? It's like, c'est combien d'argent que tu as? That's how we used to talk growing up. Even today, we call cash or money, we call it l'argent. And actually, it's translated, it's silver. So pretty sure that comes back from the fact that we were using silver as real money and for forever, you know. And we still have that in our culture. I love it. So 17 cents is the target. We're at 5 cents. And when we get that bigger pattern, then we'll figure it out. But this is not signs of a total crumble in the junior sector, guys. So some are getting consolidating, correcting harder right now. But this is very relative strength speaking. There's a lot of strength right here. Nobody's selling to make this crash anytime soon, guys. And you see the low risk entry was right here. When everybody was scared during the month, it was all the way down here. Then it closed the month up here. So a few months ago, this was a great low risk, high reward entry. All right. Oh, we're in the big tiers, guys. 34 minutes in. Since I'm not spending time trying to say Kirkley Clan Gold Whoops. We're saving a lot of time, guys. Okay, not a lot of candles. I might go on the weekly, but you can already see on the monthly how this is setting up. So it's setting its high water mark right here, gapped above, closed below, wicks. You think you're breaking out, but the month closed back down below. And here it's pretty much your consolidation pattern. 1 year, 3-year moving averages. Huge base right here. So this one, we don't want to go back here. This kind of low. So we're starting to build our own volume defined takeoff base. Man, I save a lot of time, guys. It adds up having those favorites. So this could be an imagined scenario. And look at that. Don't get greedy, Pat. 259 target somewhere this year. I don't know when this is going to consolidation is going to finish. You can move it along. Remember, the pattern has to complete, so you scale it out. It's not the end of the world. Adapt as a chart morphs. You can't force your targets on the market, but you could adapt. With the primary use of doing targets and time to reach them is so you could visualize. You could, in your mental, you don't trick yourself. You could say, okay, this price action, if it unfolds at the same velocity that it did before, I could imagine taking targets at this area in time and in price. But if they're not there for as hard targets, if ever there's something else and then the price action moves or it breaks down, then get another pattern, then you just scale it out. And that's it. There's no harm done unless you're playing a time decay sensitive instruments. This is 1 or 2 months. In the grand scheme of things, it shouldn't be too much. If you don't have that wiggle room in your time span, then you shouldn't be on monthly candles. You should be day trading. But if you want to do position trading and long-term swing trading, 1, 2, 3 months off, it's not the end of the world, guys. Why did I get sidetracked? So that's pretty much it, guys. So I won't even have to go on the weekly. There's starting to be enough candles to show. So the closer you are to that 1 year moving average, you see it's uptrending, heading to that bull zone, close to that 1 year moving average. Great entries, all this. You could wait for the end of the month, always good. But the drawdowns, worst case, the next month, it goes down a little lower to that 1 year moving average. But you're not buying on the breakout where it's super expensive. You're buying on a lower risk in an uptrend. Okay, am I repeating myself? I feel sometimes I repeat myself. Whoa! Okay, this one I might need to go on the weekly. Yes, GV, this is my flag pull, ride the lightning. But now look at that. Beautiful. I like it when we start setting limits. You know where resistance is, where support is. Okay, we have to go in weekly chart. So whatever exploded, look at that. Pull, flag, pull, flag, pull. I'm pretty sure, and those exponential moves, look how they work. Technical analysis works. Look at that, beautiful and overshot. And it's just beautiful. So this type of things that we could be expecting happening going forward. So this week, market says you're not ready, so you have to wait. But what's happening now, you're creating a huge volume defined takeoff pattern. And right now you got to let it wiggle out. And once you start getting squeezed up, then you'll be ready to go next step higher, guys. Let's go back on the monthly. Remove drawings. Yeah, this is going to be pretty violent. So I don't know, not a lot of data, but eventually if you don't want to get too greedy, you could expect an explosive move once that, whenever that flag resolves, whether it be this month or next month, that angle of ascent, you could probably put it here, and then you're going to get a crazy target during this year, guys. Even if this moves a little sideways, it takes a few months to explode. When it does, it should move strongly. ASM. Avino. How much data do I have here? Whoa, yeah, I've seen this chart before. I've seen you. Monthly candle chart. Okay, right away, kind of get to see horizontal breakout line, higher lows. Signs of an uptrend. Above inclining 1 year. That's my 1 year moving average. My 3 year moving average were above. It's starting to turn, slowing down. What's happening here? We're hitting some volume defined resistance. Look at all that congestion. It's normal that we're slowing down right here. Here's natural monthly defined resistance, what I call walls, previous support, turn resistance. Oh, we hit it. See that wick? No, close below. I'm going down. No, inclining 1 year moving average. Oh, breakout above. Trying to go for the second step to get out. No, going back down, but you're still doing higher lows. So let's see at the end of the month if it's ready now to close back above, or else maybe the next month, let that 1 year moving average catch up. Let that 3 year moving average flatten out even more. Closing in. See, we're still above that 1 year moving average. Still closing just a little bit. And look at that stock. Stock. Trying to get back above into the bull zone. Is it inclining? Yes, it is. Inclining stock. See where I'm going with this? When this stuff stays up here, this has a chance, this bull flag. Whoa. Let's go back. Let's do those measured moves. Hey, I did paste. Not pressing the good button. Something like that. You see, it's going to bring us to that top pattern. So this is the move that's starting to get baked into the cards this month or next month. And then when it explodes out mid-year, we should be reaching those $4 levels, guys. GGD. Gogold. Whoa. All right. Just beautiful uptrend. 1 year moving average, 3 year moving average. You see all the stocks that we had that were pulling back close to that 1 year moving average. Even Gogold, look at the crazy scare it had here. And after that, it got pulled back up. Again, with those pull flags. Pulls? Flags pulls? Look at that. Perfectly reached. Just legendary stuff. So here's another mini one right here. Sellers coming in, creating a wick. We have to still wait for the end of the month. But now on the monthly chart, it consolidated right below breakout line. It's actually broken out, guys. Yeah, these angle lines, they don't sit well when I scale. So this is it. What's the measure move for that? So this is the long term. Can he keep up 700%? Jesus. 760. Yeah, about $15 target. So this implies, pretty sure, going to be a... Where's my zigzag? I don't know if it's going to correct that much. We'll see. Potential test that breakout line. And then after that, off to the races. Something like that. Continue with that trend line. It's going to be hard to maintain that angle of ascent on the log chart. So eventually it's going to start slowing down, curving. But until then, you could expect this type of scenario there going up for Gogold. I love the names. CCW, not CCR, CCW. This one has been kind of resilient, man. I've been looking at this one for a long time. Look at that coil. Coil. Look at that. Just tight. Amidst all the correction, it's still around 50 cents, not making lower lows. Even from that previous couple of months, still higher lows. Volume defined congestion area right there. Right smack in it. Fair value. Tight coil. In the bull trend, we'd expect this to resolve upwards. So this one is one I'm keeping a close eye on. I don't know about the... let's not get greedy for the measured move. Jesus, but it could be huge. Jesus, yeah, this is a crazy one. 1400, 1450. When stuff doesn't make sense, you could go for natural. So once we break out a descending trend line, then we might slow down just a little bit at 80 cents, that horizontal breakout line. And once we close out above that, then when you're no man's land or your targets are not sure, just look at natural price action resistance. Here you had a congestion area. Here the price action refused to go up. So 340 could be a good stop to see if we consolidate, if we create another pull flag around that area. So that probably would be my first target, 340, before looking at those higher targets. Just make sure it gets out of here and see how it behaves, how fast it gets up here, and then make a decision once you're there. But still looking pretty strong amidst all the carnage. Oh, here's my rocket ship. Rocket ship candidate. No. My reputation. Rocket ship on my way to Mars. So what happened? This thing just exploded. Lots of to the moon. And yes, again, if I remove the price action, you'll see that. Look at the angle of ascent. It's starting to go up just like this was going down. You're creating a possibility of having, yes, it could reach eventually this type of it could reach this type of scenario. That's a moving average. So yeah, it could have probably an $8 target or somewhere here, 2023, before we crash, before we go back down in those 2024 low, that mid-cycle low. It's very possible. So right now, should I sell my Klondike? Is it the end of the world? Look, had a beautiful base, higher lows, breakout, strong breakout, but maybe too strong. So now it gapped up, closing, still above, not doing a lower low. Actually super healthy because it's catching up. It's letting that 1 year moving average catch up. Nice volume defined base. So all those short term traders all took their profits. And look, it was super extended from that all-time high distance from moving average. And this is when it got most bullish, when to the moon, all that, those comments I did were about this time. But now we're entering a lower risk entry area right here, guys. But what happened, that price action, is it brought the stock in the bull zone. So usually the strong moves is when you cross over, but once they're in the bull zone, then that's when go up and down, but always above an inclining 1 year moving average. And that's where you want to be. So this is actually a pretty good sign that now we're staying up there. And right now we're getting a low risk entry as close as we get to that 1 year moving average, that breakout line right here. This is getting low risk entry to get back in and see this thing keep climbing up and up. So yeah, this is an insane long-term target. Shorter term target, we have already a breakout, 300% move. 329. Got really close, guys. Got really close. Previous support. Turn resistance. Maybe this is more natural. Maybe I can get greedy. Maybe I can, Patrick. Can I? 650. Oh, okay. So it brings me in that zone here. Yeah. So maybe this is... Oh. Control Z. Oh. Yeah. So this probably could be the next target private area. Consolidate. Move, explode here. Consolidate, explode until we reach those all-time highs. Klondike. But I'm scared, Pat. It's going to go to zero, Klondike. I know it. I'm not going in now. I want to go in when it broke out. Oh, well. All right. District Metals. Another one. Here is my... Did it break out? I think it broke out this one. And it's possible, guys, if you rewatch a first original GV Sitfolio, that I didn't draw the lines exactly the same. Every time I do the charts, sometimes it's different. I do different things. I do mistakes, or it doesn't really matter. The important part is, overall, are you above an inclining 1 year moving average? Do you have the sense of the trend, the direction? And once that's established, then the precision of the actual lines, it's not, if you're not a scalper, it's not the end of the world, but because it's not perfect. See here, breakout line, retest, Oh, it's the end of the world. No, breakout line, retest. Every time, these are the early birds on these descending trend lines. The less steep the angle, the more you're getting to mainstream, and eventually when you break out mainstream, it's going to get in here at 114. That's how early you are. Mainstream always gets in on the round numbers, horizontal breakout lines. That's when it gets the attention. Look, it just did another breakout right here. So this one is relatively looks very good actually. Another flagpole. Oh no, just horrible. Something like that. So is it already enacted? Maybe. It would be the target. So 114 double this year, Q1, Q2. This area right here, it looks horrible here, scary, but look at that 1 year, 3 year moving average. That's the market telling you that the trend's up. If you want to let the market tell you when it's time, when you start closing below that 1 year moving average, then you're fighting, it's scary. CMC, man, another one that exploded, got a lot of attention, a lot of people bought here, but look at that. It stalled exactly where it was supposed to stall, previous support, turn resistance. But all the meanwhile, you're staying above that 1 year, 3 year moving average. You're letting the 1 year moving average catch up. You're letting the 3 year moving average starting to turn up, creating that upwards pressure. That's how you construct technically a bullish scenario. Forget the wall of worries on the daily chart. Look at that. The buyer's even coming in. Not even at the end of the month. So let's see where that closes. As the price action came down close to that previous breakout level right here, the price action said, no, this is it's good. So this is probably getting a low risk entry right here, guys. And is that a flagpole? There you go. Target up here. Above this congestion area right there. Could overshoot a little bit. 43 cents. Next levels are up here. 62 log chart. This thing goes exponentially. So lock in steps and ladders. RSLV. Jesus. Reyna. Okay, cannot do anything here. Not enough months. Let's zoom in on the weekly. See if we get more. Maybe not enough. Okay, let's go on the daily. I don't even have a 200-day moving average, guys. It's not been there enough. So below the 50-day moving average on the daily, the stock on the daily is actually, it's the inverse of the monthly chart. The monthly chart, when you're down here, you want to stay here, but on the daily, it's not going to stay there long. You don't want it to start their wiggling here. You want to use that as as you want to spot the divergence, isn't either bearish or bullish divergence. So right now, you see the price action, even if this huge pullback, whoa, right there, smack on the support line on the daily chart, while the stock has been doing hidden bullish divergence. So the stock has been doing lower lows and the price action higher lows. Even with this one, higher lows. So all the way here, a lot of divergence starting to build up, oversold on the daily. So I'm expecting this to close above that 1 year moving average, that 50-day moving average on the daily chart, and maybe go retest the upwards trend line right here. So that's it for Reyna. It's not a golden crisp, but it needs to start building off this. Hopefully it doesn't break down below that. Then we'd have to look at until it turns around, because you saw on the weekly, is it below? It's below my 10-week moving average, the 30-week moving average for wick. So you want that to support to hold up there. And on the monthly, still doing higher lows, still hasn't closed below. So we have to wait for the end of the month. Let's see how the month how the buyers could come in and change the perspective of that. But you always start to see the trend change on the smaller time frames. So before that monthly candle is going to look great, you want the daily to pick up, and then the daily is going to spin on the weekly, and then hopefully that's going to cascade on the monthly. So yeah, let's move on. Reyna, you're going to need a little bit of help. Sable. Reyna Sable. Okay, so this one's a beast. Broke out here above inclining 1 year, 3 year moving average. Broke out monthly. This is the support and resistance. No, but it did close above. Now it's back below. I want to see the month. I want to see that close back above that 29. If it could close back the month above that 29, this is noise. I've seen it. I've shown a lot of times. The candle goes back down below, and then people give up. And then in the final 5, 6, 8 days, price action goes up. It closes back above. Then the next month, you know what's going to do. I might do the same thing again. But you have to let the market digest what it has to digest. 1, 2, 3, 4. Bullish transition, horizontal, having a hard time above a horizontal breakout line. So this is actually a good low risk, higher reward entry. You know you're doing higher lows in an uptrend. So wherever you buy around this area right here, you're a little bit better than when you were on the breakout. See where the distance from that 1 year moving average starting to get extended. You still know you have potential, but the closer you are to it, the more it's a fair entry. Stock, bull zone. Here's a support line for the stock. All good. For Sable. Should I do a target? Target. Okay, let's do the less greedy target. So this is, let's say this, just this space right here. Sable. 300%, 325%. All right, something around here. And even if you didn't do those measured moves, you kind of guess based on previous resistance, turn support, or support, turn resistance. See that wall, test, no. Refuse to go back up. Look, it fits. It just fits. And sometimes it's close by, so you know that's a meaningful target area to take profits. So right now you're at 25 cents, and the target would be probably 120. And just look at the angle of ascent. That could happen anytime before 2021, before the end of this year. It depends which candle you have there, but if you continue on this trend line up here, that's how many 4 or 5 bagger there you could get there by the end of the year. Hello, 57 minutes in. This is great. Jesus. I think I'm spending a little bit more time per chart, so that's all good. Wow. Power. Look at that, the wick. See that wick during the month? Probably a lot of price action going back down. Eloro sucks. GV, why'd you choose that? Nobody likes it. You have to let the market, check any chart. You have to let the market do what it has to do. Meaningful breakout, resistance, support turn resistance. Right here on this wall. Oh, no. Second time. Oh, and yes, breakout. 1 year, 3 year, golden cross. I'm always enumerating all these bullish technicals. Volume defined support. This thing is in beast mode. So I don't even, let's just do a non-greedy measure move with more recent price action. 375% move. I'm going to be rich. Mommy. You could quit your day job. Okay, 375 again. So this is a 375, a little higher. Percentage moves are insane. Greedy. So right here around this congestion area. So that's your target, guys, for Eloro, about $4.72. Right now sitting at $1. No, what buck? How much? No, 240. It's at 240 already. Yeah. That one's zooming upwards. Then after that, wherever this consolidates, we'll see if we have a bigger pattern. Because remember the chart. At the end of the day, this could be a Kirkland Lake. Oh, I said it right. And this could actually be just a bigger pattern over time. Morphing into existence. Like that. So this eventually could be Just one huge pattern. But this, bigger the pattern, the more time you need in space to get that. Jesus, okay, I'm not even going to go there. Yeah, I grabbed it too low. But start with these smaller patterns closer to the breakout line. They're more meaningful, and they give reasonable targets until you reach congestion area where this thing could slow down. And then you could get out. A good, strong position / swing trade. Kuya. Might have to go down on the weekly, but look at that. 1 year, it's above the 3-year moving average, above an inclining 1-year moving average. Breakout, consolidation, breakout, consolidation. Above volume defined support right there. Measured move. $235%. Yeah, bring it close to its all-time highs. Anyways, on this chart, I like data. When I don't have a lot of data, I'm less precise. Some stuff I can't see. One, two, yeah, maybe. Breakout. Testing that breakout line. This is sweet, guys. So this one's at 228, target 668, and with that angle of ascent, you could probably have a target right here. Another one in March in 2021 to reach that target. They're always scary, man. These black candles. You never know when they're gonna stop. But as long as you're doing higher lows and you're above your moving averages, you're in uptrend. Kuya. SSV, it's in the game. Whoa, sell. Southern Silver exploration. Whoa, just see these laser beam. 1, 2, 3, 4, maybe. Not perfect. I like doing it on the closes, not on the gap ups. So this is a paradigm shift, trend line change. Early bird gets the worm, higher lows, proven on the monthly chart. Breakout to the moon. Yes, if you look at the moving averages, this thing will go to the moon, but it still has to gyrate. What has to gyrate? Gyrate? I don't know. Support, not resistance. Oh, not your resistance. Descending trend line. You're not, there's this line. Broke out. Early bird gets the worm. Pulling back out. And now it's consolidating above a 1-year inclining and 3-year moving average. Just below volume defined support. But eventually that now it's resistance. But eventually when you get back above, you're going to slide above. And look at that. Because you're in uptrend, I'm assuming that this will resolve upwards. Pull. Man, there's a lot better reward, risk versus reward entries since the last time I did this podcast for sure. So here's another target, mid-year, $2. What's this thing sitting at right now? Sitting at 40 cents. And that target... Here's pretty much the 360%. Yeah, around this area right here. Ah, Jesus. Oh, boy. So that's a target. I would reach probably that there. $2.50 to $3 target for SSE. And right now you're really getting close to a good low risk entry. Unless the market shows you that this is going to break down and you're going back down below like you did back here in 2011. Right now it's the opposite. You have to look up instead of looking down. It doesn't make sense to look down. And you're above even those 2016 highs, guys. So this, for me, it's really entering a low risk entry. And the worst it could get, probably down all the way here, a wick all the way to that previous breakout line. And then the buyers would rapidly come in and bring that price back up, guys. SSV, SCZ, SantaCruz Silver Mining. You're not allowed to pull back. You're not allowed. In a bull market, I just want it to go up. All right. You have to manage your expectations, guys. Look at that paradigm shift, breakout line. Oh, violent, but still in the downtrend. Violent, still in the downtrend. But look at that. Now you're above. You're above inclining 1 year moving average. It's changed, guys. You're just at the beginning. Every time you close into that 1 year moving average, it's a chance to get in. And the more you do it, the less chances they're probable, right? Because you're extended in the bull cycle. But at the beginning of a bull cycle, the energy that made this change up, it's not going to disappear overnight. So these are low risk entries. Don't try to outthink the price action. See, we're closing in on a breakout line of a bigger pattern. This is actually a wall, previous support, turn resistance. We broke out above it, but now it's become support again. You're getting trapped, and then you're going to move back upwards, inclining 1 year moving average. What else could I say, guys? What else could I say? Want a target? So this, do I do a big target? Because this could be a big, big pattern. This could eventually be a big base. 500% move off of this eventually. 500%. Jesus, okay, maybe that's a little high for now. Yeah, it's going to be way above those all-time highs. So I don't like that right now to maybe do it like that. Let's try. Maybe we have a pull flag pull in progress. Pull. Remove that. Copy that. There you go. Okay, maybe we'll use that as a target. That'll make more sense. Patrick, you're not allowed to change your mind. Why? And see, this one makes more sense. You're in a congestion area. It's resistance, previous support, now turn resistance, a wall. So beautiful target, $1 target for SantaCruz, guys. And shouldn't be too long in the future, guys. In the next couple of months, maybe mid-year, this thing should turn around and explode. Unless you think the gold era is ended. Aurcana. You suck, Aurcana. You don't care about the shareholders. You just dilute. I know. I read all the tweets and everything, the fundamental stuff. I love it. I just at the end of the day, I look at the price action because I don't want to. My reasoning is for all those narratives. What about, let's say the buyers, they don't care. They just overwhelm the market. Let's say the owners are diluting. They don't care about the shareholders. But what if there's just so much more buyers that overwhelm that? You see it with Tesla or whatever, these stocks, their IPOs. If you just listen to the fundamentals, any Austrian would say, look, they suck, these things. I can't buy it. But there's huge profits going on. So it could be the same thing for Aurcana or whatever stock you have. There could be some fundamental issues, but if the chart's showing that they're not apparent in the price action yet, then look at that. I love it. Beautiful pivot line to resistance, support, acts like magnet, resistance, support, now resistance, now resistance, now resistance, and it's just hitting it beautiful. So now I have my pivot line that's drawn out. It's hit it right here. I'm still above a volume, at the top layer of my volume defined base, inclining, and I'm about to have a bullish cross right here. So this is very important of the 1 year, 3 year moving average. And this is still an uptrend, guys. So this could actually be a flag, pull, can't talk anymore. Some type of thing like this, or maybe in progress. So this is a confluence of energy of support right here around that bullish cross, right below that paradigm shift pivot line. And this could be a target right here. This is a beautiful target. I love these targets where walls, look at that. It's pure, it's a magnet. It's going to attract the price action to there and trap a lot of people here. but this is a place where you could take nice profits, and you have probably this target right here. So if I look at the angle of ascent, if this resolves, another one this year. So this Aurcana right now sitting at 89 cents, and a target $2.90, $3, probably overshoot sometime this year, guys. That's what I see in the cards for Aurcana, guys. IPT. We're getting close, guys. I'm going to put all the eventually the timeline, so you'll be able to click and revisit the stocks that captivate you. Oh man, Impact, another one getting sold. But I can't wait to, honestly, I want to see the January month, how the buyers come in towards the end, because right now it's just beautiful technical analysis on the monthly chart. On the daily, it doesn't look like that because you're too zoomed in, but look at that monthly defined resistance, support, turn resistance, what I call walls. Look at that, beautiful. You're just consolidating right below it, man. The beautiful place. The first time on the violent trend reversal, it's rare you see that do a V shape and explode upwards. But on the second one, especially if you consolidate above, even better. But if you consolidate close to it, you're augmenting, I think, your chances of when that 1 year moving average catches up and the 3 year moving average catches up, you're augmenting your chances of breaking upwards, especially in a precious metals bull market. Here's a strong base. So you're right close right here. So this thing right here, this another flag pull, I think that's going to be the trademark of this Sitfolio episode 2. So let's see where this closes, the month. Let's not get too greedy, but look at the angle of ascent, guys. It's just violent. Even if I slant it a little bit, all these targets there, the precious metals are looking to make an up leg, I believe, in this year. 76 degrees. That was something right here. So another one. Look at that. The move is going to bring me to those all-time highs. Just beautiful, symmetrical, measure moves. Everything aligns, the piece of the puzzle. So this one here, mid-year, $2.26 for IPT. Right now sitting at 89 cents. You're dreaming, Pat. You're dreaming. Maybe. But until the 1 year, we start closing below the 1 year moving average. That's the way I see it. Okay, this one's a mess, man. This is really messing up the chart. Equity metals, I don't know what happened there. Yikes, look at that. The 3 year moving average is all over the place. But the 1 year moving average is starting to show reality, so we're above it. Huge volume defined base right there. We're above that volume defined base. That wick consolidating, closing. Buyers coming in. We're still above higher lows. Looks great, guys. Man, it's weird how 1 month of down and everybody's jumping ship. Everybody. Even me, second doubting myself. It's okay, like looking at different charts, landscape. So maybe this is going to be an eventual bull flag. That's the only thing I see is like when you discover head and shoulders, that's what you see all the time. Now I'm stuck on these. Jeez, it's hard to tell this one. For the targets, I want to give you but this congestion area, this could probably be a target zone. The walls. So before you think of a natural resistance as a target, think of that pattern where it broke down. Because now that support, a lot of people bought here, and when they get back to their price, they say, "Oh, I'm out. I'm out." Like right here, you see that support and resistance, a wick, and all these bag holders here. So I'm gonna sell. So right now, maybe this is even a more logical target on the way up until the chart morphs. So right now, equity 23 cents, and probably it's a 3-bagger almost 61 cents. Probably an overshoot in this territory, sometime in this summer, guys, or even before. Next one. Oh, we're getting to the big ones, guys. Man, we might keep this under 3 hours. No, it's 1 hour 15 in. We're good. We're good, guys. So is this it did break out this. So Strikepoint. 1, 2, 3. Breakout, consolidation, paradigm shift trend line. Inclining 1 year. Above, starting to incline 3 year, consolidating right below. Confirm breakout in December. Confirm breakout in December. I have to repeat that. Volume defined breakout line. Volume defined right here. We're above it. Now it's serving as support. This is a low risk entry right here. From where it's situated, it looks pretty damn sweet. Sorry about the language. Pull flag pull. Something like that maybe. And then off you go. Is that a little high? There will be some resistance right here at 67 cents. See how far we are from the 1 year moving average? Now we're getting closer and closer. So this is the fear entry when you're paralyzed. But look at the stock. Is the stock crumbling down? No, it's trying to even turn around. It's trying to stay in that bullish territory right here. Higher lows on the stock. A day does not make a month. So you got to let that month close. See if you could close above here. But it looks like a nice confluence of support right here for Strikepoint, guys. Low risk entry, higher reward from here. Strikepoint. GOG. Golden tag. Golden tag. You suck. And look at that. By miracle, it's just hitting all-time monthly defined resistance. Or very close to it. Look at that. Those wicks above refuse to close like clockwork. Perfect timing. Oh, no. 1, 2, 3 tests. 1 hibernation. It made a smaller pattern. Broke out above in June. It rushed, measured move. It rushed to it. Got to it super fast. 330%. It's probably going to be smack down 300. Oh, look at that. Yeah, 330%. It did it. Got close to that top. And now it's just waiting. It's going to hibernate close to that breakout line for that bigger pattern. This one's a beast. This one's a beast. So this would probably be, I won't get too greedy. 2,000% move, guys. If this thing breaks out, this is going to be Kirkland Lake. Oh, I said it. $14 target once this all said and done for a GOG, golden tag. This is the big play. This is the big move in play. So right now, consolidating right below it. Traders, whatnots, early birds. Let those 1 year moving averages, 3 year moving average catch up. See here it was overextended. But even as the moving, that's a correction. A correction, it's either price action or time or both. So a correction, you know when it's close to being done, or a consolidation when you're close to that 1 year moving average. Either time enough went by where the price action stayed high but the moving average catched up, or the price action violently came back down and let the moving average catch up. But this is like a beautiful consolidation, still going upwards but letting moving average catch up, or lower risk entry approaching right here. The stock is in beautiful position in the bullish zone. Look at that. Still in the bull zone. Higher lows. Jesus, what else do you want, guys? What else? Golden tag. Top 5, guys. The beasts. What could I do with Aya? This one's a weird looking chart. Jeez, what am I looking at? Monthly defined breakout line. When you're not sure, look at the moving averages. 1 year inclining, 3 year inclining, and a golden cross right here. The great low risk entry was in November, actually, right here. See, it broke out in October. Then you had a candle right here closing right above that previous monthly defined resistance. And right now it's off to the races, stalling a little bit. I'm not quite sure where my measured move is for Aya Gold. What am I dealing with here? Because right here, this is indecision. This is I don't know what you call this, a doji or spinning top. Buyers came in, sellers came in. Now it's just flat. Maybe it just needs more time for the price action to catch up, extended itself too much. But where's my measured move here? I don't like this bottom. I don't want to get too greedy. But let's do say that this is what's in play. But yikes. I really like to have more candles and let this thing morph to get more precision on the now this kind of seems like a greedy type move. 500%, where does it bring me? $17 right now. It's sitting at 417. That's why I like Stan Weinstein's stage analysis. When you don't have swing move, when you don't have swing targets because of the chart patterns, you can't. There's nothing. You stay in the trade as long as you're above an inclining 30-week moving average. So it's this one. This thing could trend on like this. Look, you could look at every week. Am I below? No. Okay, move on. And then you'd sell when you get a close below the 30-week moving average. Then you'd sell, or if you do a new low, you'd sell. So right now, look at that. The month, actually, a lot of buyers came back in. If you'd play this as stage Weinstein and you want to ride this for 10, 15, or 5 years, you could just play it as a stage analysis play and just keep a look at it every week. As long as it's above the 30-week moving average, you just move along, you go to another chart. Eventually, if we get some more meaningful patterns, then we could do some measured moves. But right now, it's in a beautiful stage 2 and above a lot of volume defined base, so nothing wrong here. Even if it did 8% down, that's nothing. That's noise. Noise. Or is it noise? It's a top. It's a top. All right, aftermath. The beast. Higher lows, inclining 1 year, 3-year moving averages. Volume defined node, we're right above it. We broke out above this volume defined base, the regular defined base right here. So this candle is very important. This August candle actually broke out, consolidated, retested, continued upwards off this consolidation move right there. And now we're about to retest this consolidation pattern. It's the end of the world, Pat. So this is probably a flag pull on its way to greedy targets above Pat. I wonder how much time I save because of these favorites. So 385. So now this thing, aftermath, is sitting at 112. 3-bagger from here. I don't know how greedy we could get about this measured move. In time, again, this is something this spring or this, because of the angle of ascent there, this should happen pretty fast, that we should be reaching those areas right here. Inclining 1 year, 3 moving average, remove the noise. If I wouldn't show you all those black candles, those ups and downs, anybody would have bought on this golden cross here, we've been holding, would be making a lot of money all that time. All those worries, the Fed, are they going to print, US dollars going up, down. If you remove all the noise, if you would have bought here in August, the price was, I don't know what the price was, I'll show you here. You remove all the noise on this golden cross, you would have bought here at 24 cents. And just remove the noise, and you're above that 3-year moving average, keep going up, you would be all the way up here already. You gotta use technical analysis to help your emotions, not make them worse. Daily chart is gonna kill you. Moving averages are very good. Vangold looks great. I don't know. Yeah, Vangold looks pretty sweet. 1 year, 3-year moving average, inclining 3-year up here, inclining 1 year above. I'm running out of breath, guys. Resistance, turn support, turn resistance, test once, test twice, right below it, starting to consolidate below it. So that's my breakout line, higher lows, volume defined base, right above it. So this, I don't know, something's December, right? I don't know, there's no January candle, so I don't know where it'd be today. But if the chart keeps going like that, it looks really great. This could, I wonder if this is another pull flag. So consolidating below, I don't know how it's going to look like, but above a 3-year, 1 year moving average, The magic. Look at that hitting. Previous support, turn resistance. So this is a beautiful, beautiful target area right here. So again, something these charts are looking if they could continue like this, break on the next month or two. This month we're looking at a fast moves in during this year, guys. Not December, but more during the summer months, close to the fall. Again, the markets move slower than my imagination there, but these consolidation patterns should be resolving upwards. Until we get closes below those 1 year moving averages, that's the way you should see it. Look at that. Defiance. Huge long-term pattern. Breakout all-time highs in November. Nothing wrong there. Oh no, it's pulling back. Well, usually within 1 to 3 months after a breakout, you do pull back and you go and retest that breakout line. So that's probably what's in the cards right here. Trying to pull back above and inclining. Let that 1 year and 3 year moving average catch up. See, kind of getting extended. But look at that. Oh, it's dropping a lot. So now you're approaching really good low risk entry. And even amidst that pullback, you're still in the power bull zone, guys. Up here, higher lows in the power bull zone where a lot of price appreciation usually happens. So this is actually creating a good low risk, high reward entry. The closer you get to here, the more the 1 year average catches up. But I expect this, if there's ever a wick below that, it's not going to be for long. Price action should close it back up. Defiance is a beast. So is this creating a bull flag or a flag pull? Something like that could eventually resolve, going sideways. And then here's my targets, trying to get some targets in those clear skies. Man, more than a 4-bagger. This thing's sitting at 75 cents. And not now it's at maybe $4 target, maybe overshoot. I don't know when it's going to resolve. Maybe sometimes this year we could get these targets later this year. Else I had that measured move. Let's get for a non-greedy target, 300% move. Again, if you're in no man's land, stage analysis is the best. It's going to be how much is that for? 500%. Stage analysis is going to let you stay in the trend. Like, let's go on the weekly. Stage analysis, standard on 30-week moving average, but it works on any type of moving averages. You see, this was pretty strong uptrend, so the 10-week couldn't take it anymore, but you still have the 30-week. So traders probably would have wanted to trade out. It's probably maybe create some selling. But as long as you're above an inclining 30-week moving average, the investor's way, you stay in it. So maybe that's what's in the cards. You're going to go retest that and then continue upwards. Look at that, the power in 2016. So you want the 30-week moving average to hold up. And if it does hold up close to that breakout line, then this thing could power up to that $4 target. ABRA, guys, last one. Let's go on the monthly. Because if I go on the daily, I'll be scared. I might have to go. Not a lot of data. So how has that chart morphed? Okay, the original breakout was down here. Beautiful volume defined base. That was the early bird time. We're not there anymore, so now we're advancing. Breakout, hitting some resistance. Consolidation close to that 1 year moving average, inclining. 3 year moving average is now inclining. Consolidation move, breakout again, now testing that. So we have to see how the month closes. Are we going to close much lower? We'll have to find out. But I'd probably love to have more. I wonder if it could continue with this angle of ascent, giving me my target, $2 target for ABRA. Now it's at 40 cents. So what's that, 4 or 5 bagger? Jesus, guys, you see 11% days, but on those days that are red, we've seen these do 20% days up. So it's noise. If I go on the daily chart, let me zoom in on the daily chart there. Here's my 200-day moving average. Look at that dip below. Look at that breakdown. It stayed a long time below that 50-day moving average. Sideways, explode up. What is it? There's some days of 14, 15% up. Now it's going down. There's a lot of congestion, a lot of support here. Volume defined support right this at these levels. Higher lows. So until this low, we start doing a lower low here, and this starts cascading on the hard time frames, breaking down. You have to respect that inclining 200-day moving average power. So a sideways move. Look how stretched you were here from that 200-day moving average. A lot of people buy here. Oh man, it's going to the moon. It will be, but in time, not right now. So now it went back down, stayed below that 50-day moving average, went back above a little bit, back below. Look, even some hidden bullish divergence, higher lows on the price action, higher lows, lower lows starting to appear maybe on the indicator on the stock. So that's showing a rebound possibility there on the daily chart. Guys, that is it, man. That is episode 2, GV Sitfolio. Just insane stuff. Kudos for GV for putting this together, doing all the research you can. Even if I don't do fundamentals, I do believe that if the fundamentals are properly aligned with the chart action, then it's a Molotov cocktail recipe for explosive moves. Why not have both of best worlds, right? It just doesn't make sense to not have that. And don't forget, guys, top right, check out the sign up to Silver's free newsletter. Jeff Clark again, if you know, from Gold Silver. All these interviews with Mike Maloney, they're both legends in my book. North Star, charting legend also. Yeah, Kevin, no pressure. Or you could sign up in the description, free newsletter, and I contribute every week a couple of charts that you won't see on Twitter, and they're absolutely free, so you could get them there. All right, guys, hope you enjoy it. Until the next episode. Ciao, guys. Ciao. Do-do-do-do.